Welcome back to BestProp4U. Today we are looking at Euro USD, which has plunged to a one-year low, currently trading below 114 at 113.78. This massive drop is being driven by central bank divergence and growing fears of European stagflation. On the US side, the dollar remains strong, backed by expectations that a hawkish Fed will raise rates later this year. But the euro is crumbling despite the ECB raising rates, and that's because ECB President Lagarde made hawkish but concerning comments yesterday. She stated that central bank does not need to respond aggressively to the Middle East conflict, noting that inflation should return to target. But PMI readings showed private sector activity in Germany contracting at the fastest pace since 2024. So with high inflation and shrinking growth, and of course rising rates, markets are pricing stagflation, causing the euro to bleed out. So on the chart, starting with the weekly, things look incredibly dangerous for the euro. We are currently flirting with the 38.2 Fibonacci at 113.60, and the RSI just started to kind of dip below the 40 level. So if we lose this critical support at 113.60, then this would essentially open the door to the 50 Fibonacci, which is at 111.30. Before that, however, we do have a very strong support at the July 2023 high of 112.50, let's call it. So have these three very important levels take into consideration on the weekly. So if the 38.2 fails and the 112.80 fails, then we are heading for 111.30. Fortunately or unfortunately, depending on which side of the trade you are. But the RSI is still at 40. There is room for 30. I'm going to go, of course, lower down to see what the daily chart reveals. And as you can see, on the daily chart, we are seeing the Bollinger Bands expanding aggressively. The bottom looks down, the middle one looks down, and the upper Bollinger Band is expanding. This is exactly what a breakout should look like. So it also shows potential for further downside, but we'll have structural support at this level, 113.80, 114, call it whatever you may. And if we do manage to reverse as the day draws to a close, or even tomorrow, without a validated or confirmed break, then we could see prices returning back to around 115, which is the previous support level. But obviously, without breaking above 116.30 or so, or even the middle Bollinger Band at 115.66, it is unlikely that this is going to be a full-blown reversal, more likely a bounce that would lead Euro USD high in the very short term. So if we do manage, of course, a daily close below 114, then the situation is going to be more damaging for those who are bullish currently, because the losing of the 114 handle, if it's followed up by three subsequent following sessions in the red, would essentially validate the daily breakout, which would, of course, open the door to 111.30 and perhaps even lower territories. Now, I did mention, of course, the 115 level, and want to go down on the 4-hour as the day closes, draws to a close, to see whether there is any sort of respite on the 4-hour chart. What we're going to see that we do have a previous support resistance at 114.95, very close to 115, and the very short term level that we can focus on is the 114.78. Notably, the 4-hour shows a flatness on the lower Bollinger Band, but the other two are looking down, which suggests, given of course we are still in oversold territory, that there could be further downside. But if we manage to reclaim, since we have a flattening lower Bollinger Band, the 114.12, then the next move to the upside could be at 114.58, which might open the door to higher levels, with an important 4-hour candle here opening at 115.93. This is a very important level, but it's way past current price action. Okay, let's also not forget that the 50 Fibonacci at 114.99, 115, let's call it, is exactly where the previous major support bounce was seen. So this makes the 115 level quite important in the short to medium term, in case, of course, we do see a reclaim of 114.18 and a short-term reversal towards the 38.2 and the 50, of course. Then down on the 1-hour chart, we don't really see much happening here, and price action remains bearish. However, we do see some sort of divergence on the RSI while prices are falling, and we do see the Bollinger Bands, all of them looking down rather than one expanding, the top one or the bottom, which suggests indeed a trend to the downside. However, not a volatile breakout might be expected due to this sort of organic, I would say, tilt of the Bollinger Bands looking to the downside. And then again, the 114.17 level we identified before, it's the middle Bollinger Band on the 1 hour, which again brings into focus how effective the Bollinger Bands can be when trading long or short term trends. So the level to pay attention to here is the 113.76, the 38.2 Fibonacci. If we do see a move to the upside, a bounce, we have to reclaim the 114.15 or 17. Otherwise, most likely a very short-lived move, and we should be looking for further moves to the downside. So as the day draws to close, watch the 1-hour chart closely. If this bottom at 38.2 holds, we're looking for a potential short-term reversal back to 114.17, and this level acted as a bottom, as we said last week, and aligns with the 1-hour median Bollinger Band. So trade safe and watch that 114 boundary closely.